So awesome. Well, welcome everyone. We're gonna talk about IPO stocks today. We're gonna deep dive three of them, more recent IPOs. So we're hopefully gonna be able to discover some key points to watch out for, like in terms of stocks with an initial public offering. So this is for just reference. This is more being privately held or like not publicly held to public, basically first time launching in the stock market. We'll basically describe what an IPO is shortly. I guess a little bit about us. I think we probably made an intro already, but this is our third time hosting this event. My name is John. I'm here with Joseph and Efe. They're both friends and also co-founders of Marketplace, which is our stock market discussion platform. But we all have our daytime jobs, and the reason why we created this meetup is to meet with investors like yourselves, learn together and collaborate together. We don't claim to be, like giving any advice. We don't give trading advice. We don't claim to be experts, but we do have a specialty, all of us. I think we went through like FA's more tech and AI stocks based on his niche experience and trade. I'm more of a value trader, particularly in fintech financial. You can call me more like bargain hunter. And Joseph more on the dividend stock side of things. And he's the younger generation fire movements person. So he's really into passive income.
I hate that sums it up so well, though.
It's a generational thing, I guess. Awesome. So I guess without further ado, we can maybe start with the description of an IPO. IPO is the process of offering shares of a private corporation to the public in a new stock issuance for the first time. So I guess if you haven't heard the term, really, this is what IPO stands for. Based on quick scan online, my summary from multiple articles is that there's a couple key points to watch out for IPOs. First and foremost, I guess someone needs to do a very deep due diligence to understand the company's products and services, and also within their industry and vertical, how much of a competitive edge do they have versus competition. That's quite important, like recent press releases, financial health, I guess, looking at the revenue growth during the privately held times, profit margins, things like revenues, cost of sales, basic financials. This is all usually publicly stated online prior and during the IPO. And then the valuation, who is valuing them based on what metrics. These are all achievable like online. If you, basically like spend some time Googling it, you'll be able to find like articles about it. Even NASDAQ.com lists certain levels of information. So yeah, these are important two things. Also timing, one should assess the market conditions based on the industry, what's on the pipeline. I mean, let's just say there's a pharmaceutical stock IPO. You need to look at their, I guess, development pipeline. If there's any like medication or some sort of a breakthrough technology that's pending like FDA approval. If it's a financial stock, you might look at like their new products, like let's just say it's going to be like a privately held bank going public. You can look at their loan products. You can look at their credit cards, debit cards. What do they offer? What type of partnerships do they have? So these will basically important. Management also, especially for small cap companies, having a good track records in their board really helps from biz dev angle, and also gives you an idea basically what this company is going through at that point. So looking at the management is one of the first things actually as a value investor that I do is I go to the company's website, click about us, look at the board and try to basically make a sense of like what's the board's background is, and then read a little bit more about what's coming down the pipe, and try to see basically if these guys with this track record can pull this off, and just basically guesstimate where the company's direction will be. So that's something that I look, it's a crucial factor. And the long-term potential, like in terms of is it more like an short-term hype, like during COVID, for example, there has been a lot of like gig economy and some other verticals that were like super hot and basically like valued quite highly, but then it was more like a temporary thing. So need to look at the long-term potential and like how scalable and sustainable their both revenue models, but also the product itself within ever-changing landscape. and look at it from like the vertical industry level. There's an article that we wrote, and it's posted on medium.com, free to gain access. I think you can even like publicly access it. If Meetup chat allows me, I will copy and paste this. You guys can read a little bit more on that there as well.
Yeah, I mean, I can talk a little bit about what I think about IPOs too. So what I look at, I should rather say. So when I look at IPOs, I am very picky about IPOs. I only like go for companies that I have known for a while that are going IPO. I try to look at their competition, their established competition, and I look at the company that's doing the similar thing, and do I think that they're doing it better? And if they are doing it better, what are they being valued at during IPO? Because they get assigned some sort of value, basically. And then if I think that they're gonna beat it or they're gonna basically outperform, then I might think about investing maybe like in a month or two. I usually don't go for the IPO itself because they usually go down. Although, like the next slide is gonna show the volatility of IPOs that you should be aware of. When you're putting your money in an IPO, you know that you don't know what other people are thinking, and that's basically what comes down to investing in my experience, is that what other people think, not necessarily what things are. Because I've seen time and again where a particular news should have affected a company positively where it affected it negatively. Sometimes the news are baked in, or sometimes people just don't understand what the news is, which also happens. So that's why I'm like very hesitant when it comes to IPOs, because I don't know anything, and well, nobody knows anything about like a historical sentiment about a specific stock.
I also kind of want to add on there, and John touched on this. FA, you mentioned that a lot of times IPOs go down near immediately after, going public and going live for trading for the first time.
Yeah.
One of the biggest metrics by far that I try to look for is the lockup period, which is basically to say people who hold shares in the company while it's still private, whether that be executive management, employees, whoever it may be, how long do they have to hold their shares before they can sell? Because I don't like investing in IPOs basically ever, just as a personal rule, but that's my preferences with my money. Do your own due diligence. Because the way I see it, in my opinion at least, IPOs are always priced in a way for internal employees to make money, not you and me. So you'll see a lot of these drops on day one, day two, day three, because basically because the internal employees who have held shares of these private companies suddenly have a space to sell them. So suddenly they're worth quote unquote real money now, and they're going to cash out. And then to add on to that, another lockup period we see a lot is like 6 months post IPO.
Yep.
So if that, at least personally, if I see that, I'm expecting a drop in 6 months.
That's a very good point.
I'm sorry to cut you off. Just can you let people in the queue, John?
Oh, I didn't realize that. I wish there was a way to automate this.
There probably is. I just need to play with my settings.
Me neither. Yeah, apologies, guys. We just saw that you guys were waiting in the lobby. Hope you guys weren't waiting for such a long time.
All right. Sorry to continue, John.
Yeah, I was about to add that usually when you go to the investor relations page for any publicly traded company, you will be able to see their current board members or like higher ups in the executive force, their stock purchases and stock sales. You will see them because there's a regulatory requirement for publicly traded companies to disclose this information. So maybe post IPO, like one thing to watch out for is like if you're interested in an IPO based stock, if it's recently IPO, then you can basically like go to the investor relations page and see basically the general sentiment amongst the board. I think Joseph touched a very good point. Some board members, especially with people who are maybe planning to leave the company or like just don't care about what signal they give to the markets, they do sell in big quantities. And for a smaller cap IPO company, that might be like a short, medium term, like big drop in the stock price. They sell quite a bit. So just one thing to watch out for. I guess always go to the investor relations page. There's a lot of good information there. Also, you can see the earnings there and some other disclosures like SEC filings, lawsuits, etc. Like it by regulation, it's by SEC. Like they're supposed to publicly give this information out there to the public.
And
Every single company.
yeah, and specifically for an IPO, the document they're required to file with the SEC and is shown to the public, I believe at least a month, maybe even more before they go live for trading, is called the S1 disclosure. Whereas the company has to go over a high level, say, what they expect revenue growth to be, what revenue has been, how the internal health of the business is, and maybe most importantly, and we'll touch on this in just a minute with a few of these, what the company feels like their business risks are in the future.
Yeah, all valid points, I think, to watch out for. So yeah, why don't we go into the volatility of it? Because like you might have a company in mind that's like, oh, it's IPOing and everybody's talking about it, be it at Marketplace or some other social media place, and then you actually want to go in, but you don't really know what's going to happen. So go to the next slide, John. So this is what happens usually. Like it is very volatile, so it can go either way, and most of them actually don't go high. They usually go to low. So the right side on the is like 99% negative returns, which is basically like it went to zero after IPO. And then there's some that has gone up. Obviously, Reddit is one of them a little bit, but it's really hard to find a stock that is going to be IPOing that is actually going to be very strong unless you really believe in it and really believe in the idea. I usually stay away. You going to say, Joseph?
I was saying, unless Chick-fil-A or Buc-ee's gas stations go public, I'm not touching an IPO. I mean, for this exact reason. And to be fair, I mean, even if they go to zero in 6 months, 10 years from now, they might be worth something. I mean, how did Amazon do in its first couple of years versus where are they at now? So I guess in my opinion, if you're looking at IPOs as a short-term play, you're probably doing it wrong, is where I'm trying to go with this.
Yeah, unless you're extremely lucky, I guess.
I mean, I should say like there are some volatility plays to do, but usually IPOs don't have options, which basically like limits a lot of the volatility plays that you can do.
Oh, by far. And you quite often can't short an IPO either.
Yeah. Also, yeah, that's another point. So kind of like, yes, it's known to be volatile. That's why they're kind of limiting all the options to do anything with that volatility.
Definitely. Interesting one though, mobile health network solutions. I've never heard of this. I mean, I did the slides prior to this call, but I never heard this company before.
Yeah, me either. So that's kind of the thing. It's like we don't really know. I mean, maybe they are really good. I haven't actually checked them out.
Yeah. Just like a living proof of how volatile things are, because like this was obviously before April 10th, it was valued at 4. God knows who they worked with, I guess, currently. I mean, it could be also like pretty much like pump and dump too, right?
It could be. That's kind of you look at the company basically. So I mean, yeah,
I say that, and we got to mention at some point where SPACs really shake up the IPO conversation. That those have kind of ruined so many IPOs.
Sure do.
Cool. Before we go to the next slide and dive into like individual stocks, because we usually go like every week individual stocks, we share our due diligence with each other. Are there any questions that you guys wanna? Anybody in the chat or
any upcoming IPOs that you're watching or you're excited for? I can't think of any major ones right now, but please, if you have any, we'd love to hear about them.
Yeah, I think we can go then. On I think John, you're the first one.
I think maybe Stithard, did you have a question?
No, I was just asking, do you guys, it's because it's my first time, do you guys like take the presentation as a normal conversation where people can jump in if they want, or you guys prefer,
totally.
like
this is just a conversational thing.
Okay, all right.
Yeah, no pressure. I don't want to pressure anyone, but it is I mean, you can talk anytime you want.
Yeah, please cut us off at any time.
Yeah.
this goes to anyone. So yeah, like Efe alluded, we've got 3 stocks today. These are recent IPOs. I'm going to start with the UL Solutions Inc. It's a company based in Northbrook, Illinois. It's a QA and testing for multiple things, essentially like appliances, even like for credit cards, debit cards. Lately, they've been into like environmental health, chemical, electrical. So if you check who made the testing, like, you know, sometimes in like just about anything that you buy from like, you know, appliances to like home hardware, if you check who tested it, chances are you'll come across UL Solutions, like tested by UL. So they're pretty big, 30-year-old company, actually 40-year-old company. Sorry, my math isn't great today. And it was recently publicly offered April 2nd. So it hasn't even been a month. This is an interesting pick because even though since IPO, it didn't really move a lot further, it also shows you that for, you know, proper valuation, like you won't see a big fluctuation in terms of the stock price immediately post IPO.
John,
Right?
Really sorry to cut you off. Can you let anyone in the queue again?
Oh, well, another person. I could just try this. Perfect. Yeah, so like this one was IPO that I believe around like 33 or 34-ish, and current stock price is 34.64. And the 52, well, it hasn't been 52 weeks, it's been only 3 weeks, but it's been basically between like 35 to 33. So this is almost like a good example of like with the proper valuation, established company, even though it's not massive large cap company. I would almost place this as small to medium cap, maybe medium cap, I guess. It hasn't been moving in either direction. It's quite worldwide known. I would recommend like checking this company out, do your own due diligence. One of the newer verticals that's interesting is that with the US government, they went into some recent contracts with environmental health and safety testing and consultation. As you know, like green energy, you know, electric vehicles, these type of things are basically taking, like they're not edge cases anymore, they're becoming mainstream. This might improve UL's chances of taking a larger market share and expand its business. And it's also at the same time quite global. They do exist in Europe. I think they have a big HQ in Netherlands. So you might want to check out UL from global angle perspective. I unfortunately didn't have a chance to go through their last 5 years revenues, cost of sales, but from what I remember, I think their gross margin was around like 30 to 35%, which isn't terrible, I guess, but gotta check their financials a little further. So yeah, does anybody have any questions on UL?
Who are their like customers?
Very good question. So their customers can vary. It could be, say, Kenmore appliances, or it could be US governments, right, for a project. So it varies, but largely it would be, I would say, appliances and home hardware type. So like your fridge, for example, washing machine, dishwasher. But they do also do the QA testing for the, I guess, like the hardware of even credit and debit cards or the chips of the cards. That's how I come to know them in the financial industry. They're one of the largest chip QA company for pretty much worldwide for credit and debit cards. They do have labs that they're affiliated with MasterCard, Visa, Amex, and they do the prior to the transactional test where you tap your card or enter your card and like put your PIN. They do more lab testing in terms of like how durable the chip material is the encryption like done correctly. And they're provisioned by the large payment schemes for this. Same goes to the appliances, because as you can imagine, these companies do have QA prior to release, but they want to have almost like an industry standard QA to prove that everything works. And it's more of an objective opinion. So they pay UL to do a further QA before they can actually go to market with whatever they're selling. So it varies, but I would say like mostly like electrical based or like chip based. They do all these, but I would say like appliances historically has been one of their top ones, but it's diversifying now.
So
essentially, companies can claim that they are third-party their products are third-party tested,
basically.
so to speak.
Yes, exactly. Good point.
So John, they have their first ever earnings call coming up here in about 2 weeks.
I've seen that. Yes.
I would say, yeah, for anyone, I almost said watching at home, which I guess we all kind of are. May 16th pre-market. I haven't seen. I was kind of over here Googling, and even when I was looking at these slides when you sent them to us, not a lot of buzz or analyst buzz around them, which I think is kind of expected for a first ever earnings call. Anything you're expected to hear out of them?
Like I said, like I mean, you can probably see from the stock price too, the volume hasn't been too crazy. It wasn't super heavily marketized too. Like I even like had hard time like other than the official sources like UL's own website or Nasdaq or a couple places like Motley Fool. I even had a hard time finding details of the IPO and like even recent news. So yeah, I don't think other than these new verticals, US government contracts on the health and safety testing, I haven't seen much public attention to the company. I've just picked it because I knew them personally, and I do believe that they do have a legit product and services with a worldwide web around them and a good track record. But yeah, I wouldn't say that a major move is expected. I would say short term. This could be a good one to diversify your portfolio a little bit because it's a very niche industry and they're the dominant force. There's a couple other companies that are in the competition, but not as big.
So I guess also kind of just on that while we're on the subject, I've never heard of this company before you brought them to my attention. I'm sure a lot of other people haven't either. I mean, you said it yourself, they're in a very niche. So in terms of IPOs, I'm thinking back to like Reddit, Airbnb, Instacart, some of the like massively hyped up IPOs that have like immediately crashed. Do you think that UL Solutions was like valued fairly or, more
Yeah.
fairly than others? Or do you think they just weren't hyped up by r/Wall Street bets?
I would say it's valued fairly because I kind of know the industry that they're in. They try not to be a speculative company because, yes, stock price is of importance, raising money from like going public, but also they do have a lot of like large global enterprise clients. Like if you're providing quality solutions for, say, like electric vehicles or MasterCard, you want to kind of like keep things a little real. So maybe versus the next stocks that we're going to cover, this was a little bit more, I would say, like delicately valued, I would say. I haven't seen who valued it or when it was valued, to be quite fair, but I think your guess is probably true.
I would say, I mean, here you talk about, I'm comparing them a lot to like a Home Depot type stock, which I know two totally separate industries in a lot of ways, but I mean, it sounds very much like one of those stocks where like they're kind of, I mean, basically a blue chip. They're going to do their thing. They're going to make a pretty good amount of money, maybe issue a nice dividend.
Yeah.
And that's just kind of, which is weird to see with an IPO, but I mean, we're talking a 40-year-old company that by the looks of it was definitely a unicorn.
Oh, big time for a while too.
Yeah. So, I mean, maybe it's, the next blue chip in the making. Like, I don't know. You may have sold me on the investment, John.
Could be.
Also, it's not hyped as well because there's no buzzword around the company. It's quote unquote boring, right?
Yeah.
What they do.
Yes, very much so.
If they could just put AI in there, like just slip it into one earnings call.
Blockchain AI.
Yeah.
Yeah. Well, there's over how many companies are there in New York Stock Exchange? Like well over 3,000, I guess. I don't want to misquote this. So there will be a couple lame ones, definitely, in terms of product proposition.
Well, I mean, lame company, in my opinion, lame companies make money. There's nothing wrong with that.
Yeah.
I mean,
depends on the investing style too, right? Like I'm a pretty much like long-term investor. So
I would say I love like Canadian banks. You and I have talked about that several times now.
It doesn't get more boring than that.
I don't know when the last time they did something exciting, but I collect my 4% dividend every quarter.
Yeah. They're probably older than Canada, like literally speaking.
Probably, yeah.
Because I think the constitution was 1867 here. We were talking about dividend date the other week, whereas banks were founded in like early 1800s. So really old banks.
So also, John, just I Googled your statistic here. 2,800 companies on the NYSE, 3,300 on the NASDAQ, about 5,100 total traded on US markets.
Wow.
Or that'd be 6,100.
I wasn't super far off, I guess.
I know you split them right down the middle.
because I said NYSC 3000, I think only. So I was far off by 10%, I guess.
Well,
Cool.
we'll give you the rounding error.
The constellation. I can move on to the next one. Does anybody have any questions, comments to add anything?
Just one thing, you mentioned the gross margin was what, 35%-ish? Is
Yeah.
it in line with the rest of the industry doing similar things? But you also mentioned it's a unicorn, so there are probably very few companies who do this.
Very few companies. From what I know, there's another company that's pretty much within the same niche. I can just give the name to you. The challenge was coming to this presentation. I was expecting this question. Their other bigger competitor isn't publicly trading. It's a Belgium-based company, FIME. They're literally like almost interchangeable, like to like, in terms of their scope. But I need to do a little bit more due diligence. And if I can maybe get back to you in the next couple of days, if I find something.
Oh, sure.
Yeah, I can use the event chat for that. But yeah, that's a very good question. And I was considering that coming to the call, like who do I list as the competitors? But unfortunately, they're not publicly trading in the US markets. They're either international or just privately held.
Got it.
Cool.
Yeah.
I think we can move on to the next one then.
And handing over to you, Efe,
Yep.
I think for the next one. Something more familiar and exciting.
Yeah. I don't know what exciting, but yeah, definitely something. So Reddit, I don't know how many of you use Reddit, but I've been using Reddit since basically 2011-ish. I think when it first came out. Not first came out, actually. Found out 2005 apparently. I didn't know that. So anyway, so Reddit just came out. It's been a couple of months since the IPO, and the first day it came out, it went up to basically $74, and then it came back down. So kind of what I was saying before as an IPO is like you never know what's going to happen, and Reddit is a website and an app that has very high upside potential because of basically the different kind of audience that it hits versus Facebook and Instagram, which is a positive and also a negative, which I'm going to get into. So basically, what happens? So how many users does Reddit have? They have like 600 million, 500 million users, monthly users, and half of that is weekly active, which is a very good indicator that the users are always on the website, kind of like Instagram or Facebook. So what they specialize in, well, kind of everything. It's not just like sharing your social life. It's more like getting together. It's more kind of more intellectual in some sense. In some sense, it's not. But what they like from an investor's point of view, what they really have is basically data. And Reddit has been honest about this, despite their user bases vicious, that they are willing to sell their data to AI companies. And that's basically how they're going to be making money. They do have revenues where it's come to like ads and like gift giving and things like that. But the real money that they are banking on is the AI data that they're going to be selling.
Hey, FA, can I interrupt you for a second there? Because I do have a question.
Go ahead.
So in 2023, 98% of Reddit's gross revenue was ad sales. How, I guess in your opinion, I know this AI thing can be pretty profitable pretty quick.
Yeah.
How long do you think it's going to be before AI takes any meaningful percentage away from ads?
I think it's going to be very soon because they just became public, right? And just last year, they stopped vending out the APIs to regular apps. They used to be free. Like they were giving this data basically for free for everyone. And then they cut down on that. So they actually closed down all the other third-party apps, and users were not happy, and they're still not happy. And they're basically starting to sell that data to AI companies. So there's a kind of like a risk here is that how is the user base going to react? If you think the user base is going to just stick to Reddit despite this, then I would say Reddit is definitely a buy because like you said, 98% ads revenue right now. How much of that is going to be like bolstered by the AI selling thing? You know, and they're coming up with like new stuff behind the scenes. Like there are like some developer tools that is going to be extending Reddit. So there's something to look forward to here. But the main reason I'm interested in Reddit's IPO is not because of that per se. I'm kind of more in the numbers game at this point for Reddit. So Reddit's market cap currently is 7 billion, and Reddit is huge. It's like one of the number one social media sites. But if you look at Pinterest is $20 billion market cap. So what does that tell me? It's like there are more users on Reddit and more active users on Reddit, and it is more profitable. But they have less market cap than Pinterest, which kind of tells me that they're not valued where they are supposed to be right now. So that's kind of why I'm a little bit bullish on Reddit. I think it's gonna come up to where like at least a Snapchat or a Pinterest is, and it's probably gonna exceed them. A Snapchat, likewise, Snapchat is also I think 20 billion. Yeah, it is.
Can I argue with you there? Because I do have another question. I'm gonna make
Yeah.
a quick bear case. So I'm looking it up. I used to know this number off quote, but Reddit did their last private funding round back in like 2022, where they valued themselves. I think it was at like 14 billion, and then they went public at a valuation of 10. I mean, Reddit themselves, it sounds like, is already devaluing their own, value or market cap. Are you thinking a long-term play, or are you expecting the stock to shoot up pretty soon?
No, not. I wouldn't say soon. I'm definitely a long-term player here. I wouldn't really say like it's gonna go up in two months or something. I'm saying that it's gonna catch up to Pinterest. That is definitely like that is 100% gonna happen. Because Pinterest does not have the same value prop as Reddit does, but also doesn't have nearly enough users as Reddit does. So it only makes sense that Reddit is gonna exceed that number. So that is my basis of where I'm like coming from.
Although Pinterest does have a better user experience. Oh, that could be that. It's yeah.
Yeah.
I think it's people have opinions. But what Reddit.
Yeah, go ahead.
No, I was gonna say what Reddit really has is their valuation is based on data. Their software, I don't know how complicated it is that it could be valued at 7 billion.
Yeah, I mean, like you said, like Pinterest, maybe the UX is a little bit better or something like that. I have used Pinterest a little bit. I'm not an expert on it. I do use Reddit a lot more, so I'm kind of used to the flow of it a little, maybe a little bit. I might be biased, but basically, like Pinterest is good at like selling stuff because it's mostly like just images. So I get that it has valuation based off of that, but Reddit has, I feel like, a little bit more than that because Reddit goes into detail of things. You can like have actual conversations on the niche that you're actually interested in, so it's a little bit easier for the advertisers to target you. Plus, there's like the AI stuff like we talked about, which I am actually pretty bullish on. I've seen a lot of different implementations on AI internally and externally. I can't really talk about the internal stuff, but externally stuff, like there's definitely a huge shift in the industry. It might not be very obvious if you're not actually in that industry, but I see AI literally on every corner, and it does help. Like, I'm not gonna lie, I was skeptical at first, but it definitely helps. So people are gonna be after this data, is what I'm saying. Like, even if it doesn't work out, companies are gonna think that it works out, and they're gonna go after this data. That's what I'm saying, basically here.
Do you foresee a situation where Reddit is no longer free because they are not just able to make any revenue from ad and AI? Because that, I feel Quora did this where now they are starting to charge users to actually view a lot of content or participate.
I think
Do you foresee that?
I think that's gonna be a hard sell for the current Reddit user base. If they ever try to do something like that, I think it'll backfire because Reddit is also porn. It's like 50% porn. I feel like
50% sounds low. Yeah.
I did not know that.
Yeah. So like, I mean, maybe they can monetize that part, but I don't know how that's gonna go because this is user generated content. It's like, how do you monetize user generated content without making people mad?
Like have like 10 post only 10 comments a day or 2-3 comments a day for free, something like that.
Yeah, like a mobile game, like an energy bar thing.
I was gonna say I'm gonna side with FA on that. Like I feel like Reddit's value prop, at least, I mean, I'm not I'll scroll Reddit a couple times a week. I'm not a huge Redditor. FA recently taught me about something with the narwhal and bacon or something like that. But that said, from an outside user or just an occasional user, I don't feel like Reddit's value prop is deep or ingrained enough that people be willing to pay for it.
Mm.
Whereas like I look at like other social media sites, like I guarantee you charge $100 a month and my grandmother's paying for Facebook.
But yeah, I mean, for the future of Reddit, they have some initiatives. They are trying to fix the mobile side for forever, and like I said, they do have something down the pipe that could change the Reddit experience as a whole. It's kind of hidden-ish unless you're like in the developer pages of Reddit. It's called the plugins, so people can make their own plugins to their own subreddits, kind of thing. So I feel like that has some potential, quite big up potential actually. But yeah, so that's kind of why I'm like, I put this on this chart not because it's coming out, because it already came out 2 months ago, and I think so. It's currently, let me see the current stock price. So it's so it's about where it was at the peak. So I think it's going to go up from here. That's what I think. My opinion. It's not financial advice, by the way, just like we said. But that's my opinion. So I think it's just something to watch out for. If nothing, I think it's supposed to be doing better than Pinterest and Snapchat. That's what I think.
I was going to say, I'm going to side with you there on the grounds of I think Reddit within the next 12 months, not financial advice, we're going to see a prop or a huge bump on the limelight effect. Because I mean, Reddit's always been a little bit of a niche social media site, but when they IPO'd, I mean, it was everywhere.
Yeah.
I can tell you a lot of my friends in like the financial world, my 9-to-5s in financial services, my coworkers who had never heard of Reddit before, we're suddenly talking about it every single day. I think within the next year, the number is going to come out, and I think all this news regarding them as a stock is going to lead enough traffic to the site that signups are going to take a huge jump. And I don't believe the market's priced that in yet.
Yeah, I agree with that sentiment actually. It's also a really great drama place too. Like they have everything. So that's kind of like the thing about Reddit. They literally have everything. Anything that you can think of, you can look it up. That includes porn too. So I don't know if they ever like did away with the porn. I don't know how that would work. That might actually be bad for them. But
well,
actually,
I've asked you this before, but I'm going to ask you this again. I think I ask you every single time we bring this up. Like you mentioned, Reddit's like 50% porn. And I remember when the whole API thing happened, the trend for subreddits was you change no matter what it is, you change your subreddit to NSFW because Reddit won't post ads on NSFW sites. As Wall Street pressures grow over the years, I mean, as we all know, stocks make a lot of money, but the price only rises if they make more money. They want to Wall Street always Wall Street always wants to see growth. Do you foresee them ever monetizing those NSFW subreddits?
It's definitely possible. They could do something, but like I said, it's going to be user generated content. And if you're making people to like if I'm posting something, especially like a porn thing about me, basically, I wouldn't want you to profit off of it. You know, they would have to come up with a model kind of like OnlyFans, really.
Yeah.
I mean, I was going to say, like, I mean, pornographic sites exist and they stay afloat with ad revenue. So it's definitely possible. The question is how you do it, how you implement
probably not at Reddit scales though. Like porn websites, the only biggest one that I know of is Pornhub. It's nowhere near as big as Reddit.
I've never looked at numbers, but I believe you.
Yeah, I mean that's kind of all I had to say about Reddit, really.
Thanks for the comprehensive review. So I take it that you're more or less bullish basically on Reddit.
Yeah,
right?
I'm more or less bullish until they hit that Pinterest mark with 20 billion.
20 billion.
After that, I can't promise anything.
Okay. Snapchat up 35% last week. Anything's possible.
Yeah.
Pinterest is looking like it's up close to 18% after hours.
Yeah, I saw that too, actually.
Yeah.
Did they report earnings today?
I think,
or was there some
yeah.
big news?
Yeah, it looks like they beat Wall Street estimates in terms of earnings. So I was just looking at that as you guys were talking, but yeah, 18%. I don't know a whole lot
Wow.
about it,
Yeah.
but yeah,
Wow, they've
might
been
be a good
beating
sign.
for a while too, right? I see plus 5 or 6 quarters in a row they've been beating by a margin.
Also, kind of just to add on to Reddit, there's a lot of talks FA kind of touched on this. Reddit's not profitable, but there's a lot of talks that content sale to AI companies could make the company profitable. Another one of these, I think we're going to see a jump when that limelight effect kicks in, and the moment Reddit hits profitability, we're going to see easily 20%. Not financial advice, just my opinion.
Yeah.
As I say, as I'm throwing out tickers, numbers, and returns.
Yeah, another one I just realized, like while I was checking that, looks like Palantir is up by a mile too. This is Cathy Wood's stock from last year, if you guys recall. Interesting.
Yeah. That is interesting.
Cool.
She lost me a lot of money.
Yeah, I wouldn't follow her necessarily normally or ever. Should we conclude with the last
Yeah.
one? Seth? Are you ready?
Yeah, I was born ready, John.
All right, awesome.
I'll trash Instacart any day of the week. So yeah, unlike I guess I'll go ahead and get that out of the way now. Unlike FA's bull case for Reddit, I am a bear on Instacart. That said, I do think they're a pretty cool company, so I want to talk about them. I love the gig economy stocks. And I do think Instacart's one of the more interesting ones because they IPO'd in September of last year. Which meant we never really saw them as a pandemic stock. Like we put there in the key facts, they saw a huge surge in demand, revenue, and everything during like 2020, 2021, especially in the world shut down when that whole thing happened that we can't say on most online sites still. And the revenue actually has stayed more constant than I think a lot of people expected since 2020. John and I were talking about this before we hopped on this call. To what extent have like Uber, DoorDash, and Instacart actually changed consumer behavior in the US? Because I mean, I still like going to the grocery store. I'll go pick up my own food before I pay for these things, but I understand that I'm also probably not the average consumer. But yeah, grocery delivery, it works. Back in 2023 when they went public, wasn't a lot of people doing it as well as they were. Few competitors here and there, but I know Uber and DoorDash have both started getting into the grocery game. But what makes me bearish on Instacart long term is I'm looking at these other retailers like Walmart, even Amazon to an extent, Kroger, and then John, I gave you a third one before we hit record or before we went on.
Targets?
Yep, Target. That's it. You were right. Who have their own in-house delivery systems. Target actually, so one of Instacart's big competitors for a long time was Shipt, who was going to IPO, but then Target just bought them out instead to be their in-house delivery. So I'm looking 5-10 years down the road. How does Instacart compete with these brick and mortar stores, brand names like Walmart, who can just do it themselves in-house? Like, how much longer do these contracts they have with these retailers, how many of them are actually going to renew? And in my opinion, not many. Again, I'm gonna call on John here again, because one idea he brought up to me was, and what I think Instacart needs to do to survive is get their own little like warehouses together and deliver straight from the warehouse. Because the only way I see this company surviving and maybe even continuing to reach any form of profitability, they've got to cut out the middleman, which right now are these stores, who I do think are going to kick them out in the next 5 to 10 years.
Okay. That's
And they also charge a premium as compared to, like, if I were to go inside the store and grab it myself, which Walmart and Amazon don't do. Like, Amazon will charge you a delivery
Yeah.
fee.
Phenomenal point.
That-
They charge, and
Very
then
good
you
point.
still have to tip.
Right. Although I always use the pickup feature. To your point where you mentioned you still like to go to the grocery store. Me personally, I was the same up until I had a child. And then pickups became more of a norm because I don't have to take my child out from the car seat and stuff like that.
You have me on that one. I am childless, so you may be talking about a factor that I hadn't considered.
Yeah, and during the pandemic, they did a good job, obviously, because
Right.
nobody could go anywhere. My biggest, like, the only time that I actually like personally use Instacart is Costco, because Costco is just so far away. I don't want to go there, and they just bring it for me. They didn't used to require membership, but I think they now do. But
Unfortunately,
like you said, like the kind of business model here is a little shaky, because if these companies start doing their own deliveries, especially Costco, they're gonna lose a lot of customers, right?
well, that, and I mean the barrier of entry, because for a while there they were doing well because like Uber just did rides, and
Mm.
DoorDash just did restaurants, and then now Uber's getting into restaurants. So for a while there they kind of had their own segment of the market. But then I look at like Uber and DoorDash, especially Uber, S&P 500 stock Uber. Oh, and Lyft too, another phenomenal example, who already are significantly larger than Instacart, are already to at least some extent profitable. Lyft will be profitable by the end of the year, mark my words. Um, I don't see why they can't just start taking Instacart's market share today.
They could, but remember that first to market is also really important. So Instacart has a brand name recognition. So when
That's fair.
you want to buy groceries, you don't necessarily think of Uber. They're gonna have to like overcome that. So for your case, where you say like you're bearish, I get that. But I don't think it's that cut and dry. But the fees is what's gonna kill Instacart. If they can undercut those, I think that's gonna be the nail in the coffin for them.
To be fair, if we had more than 10 minutes left in this call, I might have made it a little less cut and dry. But I mean, I do want to also go. I didn't say this exactly, but yeah, brand name recognition is another reason why. I mean, I look at Kroger delivery, I look at Walmart delivery, I look at Target brand delivery. When you can buy quote unquote straight from the store, I think that brand name recognition is also a huge bearish indicator for Instacart.
John, can you let someone in?
Oh, didn't realize. Again, I need to have multiple screens. Joseph, I had a question. Is Instacart global or just North America?
I
It
believe
doesn't
just North
seem Canada, but
America.
just okay.
I don't believe they've made
Business
it overseas
expansion
yet.
could be another source of, I guess, like improving its market cap and prospects too, right? I mean, I don't know. I'm just speculating, but that's just
I mean, that's a great question because I know Uber and DoorDash. I don't know about Lyft. Both exist in like
yeah.
the UK.
Uber's tremendously successful in Europe as well, for example. Yeah. I don't know about DoorDash, but like all I used in London and Frankfurt last visit was just Uber. Didn't even like think about public transit
No,
because of
there is another company in Europe who does the exact same thing. Apparently, Instacart exists in some European cities, but they
Okay.
have a very, I'm trying to find the name. Yeah, they're based out
There's
of Italy.
Glova based in Spain, as far as I recall, but
I mean, there's probably more than one. I mean, their business model isn't that,
unique,
unique. It's not
easily
exact.
copyable, I guess. Yeah.
Yeah. So apparently, yeah, there's a much bigger company, um, known as Everly, Everli, formerly Supermercado 24. They just finished Series C funding where they raised 100 million. Um, and they're out of Italy and quickly expanding across Europe.
Yeah, I mean, I think the European landscape is a little bit different though, because like these gig economies, they existed in Turkey, where I'm from, since 2000s. So America is basically playing a catch-up game. So it's a little bit difficult to say that Europe is doing this, so it's gonna come to the US. It's very different. I don't think it's. If they're Italian, they're probably gonna stick to Italy
I mean,
or Europe.
they're already in Poland, Spain, and I'm trying to see what else. But I mean, there's a very real chance you are correct.
Yeah, I mean, I remember ordering online when I was 15, which was 20 years ago, uh, to get some food. So that just like that happened in the last 5 years here,
Well,
and that hasn't had come like from Turkey. It's just happened here.
well, I mean, let me also ask you this. I mean, if these, I mean, you are much, much more familiar with the European landscape than I am. So I'm going to ask this as a serious question towards you. Will these regional companies like Everly, as the Italian company, will that hurt or even like straight up prevent Instacart's expansion into like the European market?
Potentially.
Totally. Yeah,
I would say, will consumers not pick the American company over their hometown favorite?
totally. That will definitely happen.
I think Starbucks couldn't enter the Italian market for like a good 30 years since incorporation. Like they were just like straight up not allowing Starbucks to open. There were like protests and stuff. Now there's a Starbucks branch in Italy, but there's a few only.
I
Yeah.
wonder who goes there.
That's what I was gonna say. Starbucks still can't penetrate the Australian market because there are so many Italian immigrants that make so much better coffee.
I did not know that.
Yeah, like most American companies have trouble, I guess, penetrating the European market because of that reason. They usually like especially if there's like already an established brand in that area, they usually don't go for that sort of stuff.
I mean, just look at what Walmart did in Germany is a great example.
Yeah, Walmart did quite fairly well, I guess, like given the landscape there. Because Germany is also very competitive. They've got Aldi and I guess
No,
UK.
not in Germany. Walmart collapsed near immediately. It was a huge failure.
I guess maybe I'm mixing up with the UK. Like there was one European country that they were hugely successful. But
it may have been the UK, but it definitely was not Germany. It was kind of like what was that, like Best Buy in Canada, was it, or somebody like that?
Best Buy is pretty big in Canada.
Who was it? Maybe it was Target in Canada.
Target couldn't survive more than 2 years here.
That
Target,
was it.
Yeah.
Awesome.
Cool. So you're bearish, FA is bullish.
Well, I'm not. I wouldn't say I'm bullish. I'm just saying.
FA and I are gonna have a talk out back if he's bullish.
No, I wouldn't say I'm bullish. I wouldn't touch Instacart. I'm fine with them delivering my Costco, but I wouldn't actually invest in them.
That's
I was gonna say, FA, if you want to lose, if you just want to like give away free money like that by investing in Instacart, just give it to me, and I'll at least send you pictures of the fun things I do.
Okay.
But that said, not investment advice.
Yeah.
I am not a licensed financial advisor. Neither are John nor FA.
Yeah.